1310 WIBA and Ask the Experts with Wisconsin Capital Management online. Their website, wizcap.com. That's WISCAP.com, wizcap.com, all one word. Great website to learn more about Wisconsin Capital Management, what makes them unique, how they could help you, and of course, how you can set up an appointment. All you got to do is head on over to the website, wizcap.com. That's WISCAP.com. Joining this week from Wisconsin Capital Management is Tom Plumb, certified financial analyst. Tom, how you doing this week?
Oh, Sean, great to be talking to you on this beautiful autumn day in Wisconsin. We're just excited to have a good chance to talk about some subjects dear to our heart.
We're going to talk about a really important, speaking of dear to your heart, we're going to be talking this week about the role of an investment advisor. And we've covered a lot, by the way, on this program, whether it's markets or the power of compounding, 529 plans, Roth IRAs, and of course, how Wisconsin Capital Management leverages their expertise and their analyzation and those into investments to help really benefit clients. And as mentioned, we're going to talk this week about the role of an investment advisor. You talk about really important role in understanding how that role works. And Tom, let's actually start off with that very thing about, finding the underlying investments to best meet your client's goals. That's a really important one, isn't it, Tom?
Oh, it definitely is, Sean. When we we tried to understand not only how markets have worked in the past, but all the factors that are affecting the investment merits of individual stocks and bonds, how the environment is evolving, and what items will affect these investments and their return potential. We believe that then you can construct a portfolio that helps your clients, and only then.
Talking this morning with Tom Plumb with Wisconsin Capital Management online, wizcap.com. That's WISCAP.com. Great website to learn more about Tom. Nathan, who's with us, he got the week off. He's very lucky. Great timing on that, Nathan. Of course, you can learn more about Nathan as well online, wizcap.com. Talking this week about the importance of working with a financial advisor and finding the right advisor as well. And so, obviously, I know something that's really important to you, Tom, and I often mention heading over to the website, wizcap.com, to set up an appointment. You really work to get to know and understand your clients' needs, who they are, their resources, their goals. That's really important to you, isn't it, Tom?
Oh, it definitely is, because it defines basically the time that they have for their investments to work, because some investments are more volatile, for example, when you look at shorter term times. But when you look at longer term, they may be much more predictable. So you need to define for that client what their time frame is, when they're going to need this cash, what their goals are, what they want to accomplish with it. And then you have to put it into the perspective of what the market offers them.
One of the things I find very interesting, and we'll talk about a little bit more about this, but, one of the things I find very interesting about what you guys do at Wisconsin Capital Management, Tom, is there's like this balance of, this left brain, right brain. There's obviously that part of your brain that's got to be very analytical and very, very much numbers, follow the facts, follow the data. But there is obviously the emotional and the creative and the understanding side of this as well. And it's something, as I've gotten to know you and gotten to know Nathan over the past few months, really fascinates me is how you guys are able to kind of meld those two, both the right and the left side of the brain. And Tom, when we talk about some of these resources available, things like investments, I know they kind of fall into two main categories. Am I reading that right?
Yep. Yeah, you are, Sean. Basically, you are either someone who lends money to someone. You basically trading your cash for a promise that you'll receive a specific return for a specific time. That's basically some type of debt, fixed income, might be an insurance contract, but it's something where your asset basically becomes somebody else's obligation. In other words, they promised you something. They're going to meet those terms if they can, and that's what the maximum that you can get from that. The other type of investment is either any type of what we call equity investments. It might be an equity, might be your own firm, for example. You might have your own business, but it also could be private equity. But it's something where you take the risk of ownership, and for that risk, you expect to get a return, and probably a return that exceeds the return you could get from a fixed income investment.
Really fascinating stuff. And so, as we talked this morning with Tom Plumb with Wisconsin Capital Management, talking about really working with and getting to know advisors, and a lot about what they do at Wisconsin Capital Management, as well as kind of breaking down these different investment categories here with Tom. Don't forget, if you want to learn more, you can always head on over to Wisconsin Capital Management's website. That's wiscap.com. That's WISCAP.com. That's wiscap.com. Great website there. Great place, too. If you've been listening to the program the past couple of weeks, you'd like to get to know Tom and Nate and the team a little bit more. They make it real easy to set up an appointment right online. That's wiscap.com. You can also listen back to this and previous shows, podcasts as well. Where do things like, as we talk about kind of two distinct ones, are there like hybrid situations as well in this, Tom?
Oh, yeah, and if Wall Street especially comes up with some where they will promise you a specific rate of return, or that they'll limit a risk. They have some type of participating CDs, things like that. And actually, some insurance products will allow you to participate in the equity markets to a degree. But remember, every time that you get a product from somebody, it's basically because they expect that they're going to make more money on that investment opportunities that they are exploring than they're paying you or guaranteeing you for a return. So, like an insurance company might guarantee you a certain rate of return, but then they go to take that money and they're going to invest it, and they definitely expect to leverage that money into higher returns for the insurance company.
Sounds about right. That's it. Really interesting this morning, Tom. So, what about when you own like an entity, like a debt or anything like that? What exactly? How does that part work then for the other part of this conversation, Tom?
Well, again, the contracts can say what they can be different, but what they really do is three things.
Hmm.
They guarantee you a rate of return if all the terms of the contract are met. In other words, you're lending them money under these terms because it's an obligation of that company. And when we look at bonds, for example, you can own their debt of a company, and that debt, you may feel comfortable because they say they're going to pay you a, a maximum or a specific rate of return. But there's actually, even on something as simple as a debt instrument like borrow a bond or a note or a CD, there basically are three types of risk that you have to be cognizant of.
Hmm.
One, and the most important, of course, is the entity making that promise, that obligation, has got to meet their
Hmm.
obligations. In other words, we call that default risk. If they are unable to make it, or the company folds, or some reason they don't meet their obligations. But there's also two other risks that we like to talk about. One is that payment might not be competitive in the future. We call this interest rate risk, where you may think that you have a pretty attractive investment. It pays you a specific rate of return for a specific period of time. But then at some point, the opportunity is that if you had started in the future
Hmm.
at a higher interest rate, that your investment's no longer competitive. We call that one interest rate risk. And the third is your purchasing power of the money paid back to you in the future. It may be considerably less than you accepted in the contract when we look at the purchasing power, and we call that purchasing power risk.
That is, it seems like there's a lot of currents working against you with some of this stuff, Tom, and I think it probably really reinforces the importance in working with the right people, working with great people as well. And Tom and the team at Wisconsin Capital Management, they'd love to work with you. They'd love to get to know you. If you head on over to the website wiscap.com, that's WISCAP.com. Great place to start to get to know the team. Listen back to this and previous shows podcast. Really important if you want to start that conversation. Great day to do it. Head on over to wiscap.com. You can set up an appointment right online. We're going to continue our conversation with Tom Plumb of Wisconsin Capital Management. Now that we've kind of got some of these concepts down, we're going to put a little bit into action. We'll get the details from Tom on how that's done. We will do that next as Ask the Experts with Wisconsin Capital Management, and Tom Plumb continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts with Wisconsin Capital Management. Joined this morning by Tom Plumb, Chartered Financial Analyst with Wisconsin Capital Management. You can learn more about them right online. They've got a great website. It's wiscap.com. That's WISCAP.com. That's WISCAP.com. All one word. Head on over there now. You can get to know the team. You can listen back to this and also previous shows podcasts. You can share those also right from the website and set up an appointment all online. It's a very powerful website. I hope you get a chance to head on over there today. Again, that's wiscap.com. That's WISCAP.com. As we talked in that last segment about some very, some basic concepts when it comes to investing and working on investments, and Tom, kind of bringing you into this part of the conversation as we understand those basic concepts. Then let's talk about how we apply that when you work with your investment advisor and to, of course, meet investment goals. What goes on there? So kind of in simple terms, I guess, we're thinking stocks, equities, those providing that high return on investments. There's also, of course, no guarantee out there, and fixed income, provides more stable, but it's a little more moderate. So bonds, are there risks in that area, Tom?
Well, Sean, as we've said before, there's three types of risk, and the default risk is a key one. And what are you getting paid to take that risk? In other words, the U.S. government, for example, we're pretty confident that they're going to pay us back if we lend them money. So often that's called the risk-free rate of return. It's risk-free in that there's not a chance of default because they can print the money when they want to. But it's still, there are risks. And those risks, as we're talking about, are the risk of credit, and then follow that with the risk of interest rate risk, and then obviously inflation risk. So just for an example, let's say that we agree to lend the federal government $100,000 by buying a U.S. Treasury bond that will pay 4% annually for the next 20 years. We know that they'll pay us back. They're good for it because, as I said, they can print the currency if they need to. But when you think about what other types of risk you might have with a fixed income investment, just think about 10 years from now. We don't know what the interest rates are going to be, what environment. So if 10 years from now, interest rates were 6% on a 10-year bond, that 20-year bond we bought is now a 10-year bond. We had agreed to accept 4% interest rate on it for the whole 20-year period of time. But now the opportunity would be to get a 6% bond for the remaining 10-year life of that. So when you think about that, nobody's going to give you 100 cents on a dollar for a 4% bond when they can have a 6% bond for the next 10 years. That's the interest rate risk, and that can be very, very profound. I often tell people a story about an elderly couple bought a treasury bond in 1950s to a 40-year bond where they thought that will provide me with them funds I will ever need in my life, and it's great savings, perfect credit. And then in the 80s, when interest rates went up to 16%, they needed that money. So they sold their bonds at 60 cents on the dollar because that's what they were worth in a higher interest rate environment. And not only did they lose principal, but the purchasing power from the 1950s to the 1980s meant that 60 cents on the dollar that they received was only could buy about 20 cents on the dollar when we look
Mm.
back at 1950s dollars.
Are we?
So, oh, I'm sorry, Sean.
No, I was gonna. It sounds like keeping up with or not keeping up with something as simple as inflation can be pretty detrimental here.
Oh, yeah. I mean, if you think about it, if inflation averaged 4% a year, that means if you had $100,000 in a bond, for example, and you lent it at $100,000, the next year, the purchasing power would only get you $96,000 if we're at 4% inflation. And if you looked at that for 20 years, your purchasing power would be down to 44% of the value that you had when you originally invested. So inflation is a significant risk for fixed income investments. That's one of the reasons why at Wisconsin Capital Management, we look at our fixed income investments as a tool to moderate volatility of equity investments. We know that the interest rate environment that we'll see in the future is completely unpredictable, and you want to be very careful when you try to lock in a return because that return, as good as it sounds today, may not be that good when we look back.
Talking this morning with Tom Plumb with Wisconsin Capital Management, online wiscap.com. That's WISCAP.com. And Tom, before we get to a couple of things before we wrap up, I did want to ask, as you were talking there too, it almost feels like what you guys are doing at Wisconsin Capital Management, obviously you're managing assets and really offering guidance, but there seems to be a lot of education as well, and a lot of knowledge to be shared. Is as I get a chance, and I'm very lucky to get the chance to sit down and talk with you and Nathan each week. I'm always learning something new, and I've got to guess for your clients, that's part of the experience as well of working with you guys at Wisconsin Capital Management.
We hope so, Sean,
Mm.
because we believe it's our clients' money and that they can make intelligent decisions on who they're going to engage and understanding what the trade-offs on their investments. If we explain and share with them our experience and our knowledge of the markets, that helps them because it's not an investment plan that we create for us. It's obviously something that we want for our clients. We want them to understand it. We want them to feel comfortable with it. And we want them to sleep at night because of it.
Does it help? You mentioned that last part, and I think sometimes people overlook that. Does it help? Because I think of the world that we're in right now, and there's a lot of things going on. Having that, especially financial peace of mind and that trust, it's got to be great having a local. You're local. You're here in town. You're here in Wisconsin. You're available to people. Wisconsin Capital Management. That's got to go a long way too, as to give folks peace of mind to understand that not only are they working with a real person, they're working with real people that are right here in their community. That's got to be a great benefit to your clients as well.
Well, we obviously can work with people across
Hmm.
the country and across the world, but it is really important to know the people that you're working with,
Hmm.
understand what motivates them, how they get paid, what's their interests in this whole arrangement, and make sure that you feel that you can completely trust that not that they don't have conflicts of interest, but that they have an understanding of those conflicts of interest and are dealing with them to make sure that the client comes first.
Talking this morning with Tom Plumb with Wisconsin Capital Management. Great day. Start that conversation, start that relationship. You can head on over to wiscap.com. That's WISCAP.com. Great website. You're going to make an appointment right there online. You can learn more about Wisconsin Capital Management. You can also listen back to this and previous shows. Again, that all available to you at wiscap.com. Mentioning people across the country. Maybe you've got friends or family in other states, or I know a lot of folks this time of year, maybe you're packing up and heading south for the season. Don't forget, you can always follow along at wiscap.com. That's WISCAP.com. You can take us with you. And of course, Tom and the team would love to work with you as well. Again, just head on over to the website, wiscap.com. That's WISCAP.com. Tom, it's always super informative and it's always a lot of fun. You have a fantastic day, and we'll do it all again real soon.
Thanks, Sean. It was great to chat with you today.
Chartered financial analyst Tom Plumb with Wisconsin Capital Management. Again, that website, wiscap.com. That's WISCAP.com. This is Ask the Experts with Wisconsin Capital Management right here on 13.